Welcome to my course on individual income tax in China. This is Chapter 3, Individual Income Tax Rates. The basic formula for calculating individual income tax payable is simple. Just to multiply the taxable income by the applicable tax rate. Regarding how to determine the taxable income, we'll explain it according to different types of income in subsequent chapters. And in this chapter, we talk about the applicable tax rates. Calculating individual income tax involves 4 tables of progressive tax rates and a flat tax rate. See below. Number 1. Tax rate table for comprehensive income on annual basis. And number 2, tax rate table for comprehensive income on monthly basis. Number 3, withholding and prepayment tax rate table for services income or tax resident. And number 4, tax rate table for income from business operations. And number 5, flat rate 20%. We'll talk about the 4 tax rate tables and the flat tax rate separately. The first table, tax rate table for comprehensive income on annual basis. This is a 7-level progressive tax rate table. When the annual taxable income does not exceed 36,000 RMB, the applicable tax rate is 3% and the quick deduction factor is 0. When the annual taxable income exceeds 36,000 but does not exceed 144,000 RMB, the applicable tax rate is 10% and the quick deduction is 2,520. And so on. So, we can see the minimum applicable tax rate is 3% and the maximum applicable tax rate is 45%. We can see the higher the income, the higher the applicable proportion and the heavier the tax burden. This not only reflects the principle of tax fairness, but also achieves the function of adjusting the variance gap through taxation. How to use a tax rate table in practice? For example, if I, Jack Ma, received a salary of 140,000 RMB in 2023 and have no other income, because the amount 140,000 is no more than 144,000. There are 2 tax rates involved, namely 3% and 10%, spanning 2 levels. If we don't use quick deduction factor and calculate the tax payable in segments directly, this 140,000 RMB, of which 36,000 is subject to a tax rate of 3%, and the portion between 36,000 RMB and 140,000 RMB, which is 104,000 RMB, is subject to a tax rate 10%. Therefore, the tax payable is 36,000 times 3% plus 104,000 times 10%. But if we apply the quick deduction factor to calculate the tax payable equals 140,000 times 10% minus the quick deduction factor, 2,520. Here's the 2 choices. We should know that this tax rate table only applies to 2 situations. Number 1, RIT settlement of tax residents. And number 2, withholding and prepayments of tax residents. Now look at the second table. Tax rate table for comprehensive income monthly basis. Like the first table, this is also a 7-level progressive tax rate table and applies to comprehensive income as well. And like the first table, this table is based on months, while the first table is based on tax year. Comparing two tables, we can see that dividing the notes of each level interval in the first table by 12 months is just equal to the notes of the corresponding level interval in the second table. For example, here annual basis. 36,000 divided by 12 months is just 3,000, and 144,000 divided by 12 months is just 12,000, and so on. That's it. We should note that this table only applies to number 1, calculate the payable tax separately of annual bonuses, and number 2, calculate the payable tax of salaries and wages, service income, manuscript income, royalty income for non-tax residents. Now look at the third table, withholding and prepayment tax rate table for service income of tax residents. This is the 3-level progressive tax rate table and only applies to withhold and prepay tax for service income of tax residents. In the next chapter, I'll explain it through examples. Here, the fourth table, tax rate table for income from business operations. This is a 5-level progressive tax rate table and only applies to income from business operations, whether he or she is a tax resident or non-tax resident. I'll explain it through examples later. Finally, we arrive at the flat tax rate, 20% tax rate. This tax rate applies to 4 types of income, see below. Number 1, interest and dividends and bonuses. Number 2, rental income. Number 3, income from sale of property. And number 4, contingency income. Whether he or she is a tax resident or non-tax resident, the 20% is applied when calculating the tax payable on these 4 types of income. I'll explain it through examples in the following sections. We've talked about the 4 tax rate tables and 1 flat tax rate. Here, let's have a summarization. The flat tax rate 20% is applicable to interest, dividend and bonuses, rental income, property transfer income, and contingency income. Besides, both comprehensive income and operating income are subject to progressive tax rates. What items are included in a comprehensive income? This is what I'll explain in the next chapter. So, please continue to watch my follow-up videos and don't forget to subscribe my channel and comment. See you!